Well, let's now focus on the markets, and the Nifty and Sensex has dropped about 2%. This is amid concerns over the Ukraine war and stock markets nervous about rising inflation. Let's go across to Priyanshi for all the details.
Well, yes, Gargi, as you said, markets today deep dived after a 4-day hiatus. Indian markets are trading in the red today for the third straight session. The spotlight still remains on Indian and global inflation, commodity prices and the ongoing Ukraine war. The European Union is in fact planning further sanctions on Russia that will target banks as well as oil. This in fact is impacting markets, and on the 54th day of the war, oil prices have hiked over 0.8% and are currently hovering around $112. Remember, Brent crude prices are up by over 15% since the start of the war, as they stood around $97 right before the war. Now, on the Indian markets and what the impact has been of all of these factors, Sensex and Nifty are trading in the red. The Sensex is down by over 2% and has lost over 1,200 points till now, while the broader Nifty 50 has lost over 300 points and is down by over 300 points. Now, this gets the Nifty to over 17,000 points, while the Sensex stands a little over 57,000 points. Now, let's look at the major stocks dragging the markets down. The IT shares are trading the worst currently, losing over 4%, and Infosys is the biggest loser as it has lost over 7% till now. This as India's second biggest IT service provider. Infosys's net profits rose to 12% to 5,686 crore for the quarter ended March in the year ago period, while its revenue grew nearly 23% to 30,276 rupees. But this was well below estimates and in fact lowered the fiscal year 2023 margin guidance by 100 basis points to 21 to 23%. The second share of concern is HDFC, that has lost over 3.5% as the recently released Q4 results fell short of market expectations and hurt investors' confidence. Now, just Infosys and HDFC, to put it in perspective, combined contributed to close to 500 points in the over 1,000 point Sensex fall. And Sensex, another stock that we should look at is Tata Power. The stock is trading over 4.5% lower after it announced that a consortium led by US-backed BlackRock Real Assets will invest 4,000 crore rupees in its subsidiary Tata Renewable Energy Limited for over 10% equity stake. Now, along with these stakes, external factors continue to drive Indian markets. The recently released GDP numbers from China did not fare well for the markets. The Asian markets in Japan, Shanghai lost on Monday after China GDP growth came in at 4.8% year-on-year. This rise of risk of a sharp slowdown over coming months has also risen due to COVID curbs across Shanghai and the Ukraine war showing no signs of improvement anytime soon. So, in India, back to India, another important update for our viewers is that Maruti Suzuki, which had earlier on April 6th announced a price hike upcoming, has now announced an average price hike of 1.3% across models for ex-showroom prices in Delhi. They've now put the amount for the price hike. The new prices come to effect from today. That means that Maruti cars ranging from Alto to S-Cross have now become more expensive for you. Maruti's share, though, remains stable even after the price hike was announced, though we will continue watching the shares and others. And that's all for the market update at this hour.